Last week, hedge funds increased their bearish bets on treasuries, which hit record levels. Now, this comes as treasury yields themselves surged to multi-month highs. Let's bring in Yahoo Finance's Blikre to break this down more. Hey, Jared.
Rochelle, it has been a crazy month in bond land. We're dealing with several upsets and market shocks, including Fitch, their downgrade of U.S. debt. We have the Bank of Japan tweaking their QE bond buying policy, and also the United States Treasury increasing supply. That is, their debt coming to market is more than anticipated. We can go over some of that in a minute, but I just want to show you, as you were talking about in your lead, Rochelle, we have massive opposing bets in Treasury futures. Now, these are longer dated futures, and this orange section down here is representing the leveraged fund bets to the short side. So if you're short Treasury futures, you're betting that the yield is going to increase. This line right here is a 30-year Treasury yield, and this is increasing. So these guys down here have been correct. Now, it begs the question, what about these guys up here, the cyan, these asset managers? Are they wrong? Well, this group is a bit different. This isn't leveraged longs like we have down here, hedge funds. These are pension funds, these are mutual funds, insurance companies. A lot of these companies have needs for longer dated assets to match their longer dated liabilities. If you're a pension fund, you might have to pay out over 30 years. Makes sense that you're going to buy a 30-year bond, and that's what they are doing here. I think the main point from this chart is that we are at extreme levels in both directions. And given the aforementioned shocks here, and I'll spend some time on this, it only increases the potential disruption to the bond market. And as we know, when the bond market gets obfuscated, when the bond market is dealing with a lot of volatility, guess what? That spills over into everything else, including equities, including commodities. So we know about the U.S. debt getting downgraded. What is a little bit less known, and we talked about this last week, Bank of Japan adjusting their bond buying strategy. Since about the middle of the last decade, so almost going on 10 years, the Bank of Japan has been buying every Japanese bond in sight. And this has been quelling supply. It's also been tamping down yields. But yields have been a problem recently. They've been escaping. And so the Bank of Japan has been adjusting their policy in reaction to market news without very much success. So we also have the U.S. Treasury increasing supply. I think we have about $102 billion worth of notes and bonds coming this week, plus $222 billion worth of bills. So huge supply coming online. Now, I just want to show you how this is reflecting in yields. Now, this is a 30-year T-bond yield. This is a 2-month chart, and this just shows you over the last couple weeks how yields have exploded to the upside, and that has to do with the three factors that we were just talking about. That's the 30-year. The 10-year chart looks pretty similar, but it's not as unhinged, I would say, as the 30-year. But you take a look at what's happening over the last 20 years, you're going to see that we're at some very big levels here. In fact, let me make this a max chart and a line so we can see going all the way back to the 1980s. We haven't seen these levels since the global financial crisis in here. And as we can tell, there's a lot of room to the upside if things truly become unhinged. So my point about the bond market here, here's the ICE BOV, MOVE index. This has been ticking up recently. Here's the year-to-date chart. We got this big green candle. That's from Friday. That's as of the settlement. And that just indicates that there's more activity and more volatility in the bond market. So has that spilled over into equities just yet? Not really seeing that reflected in the tape, although we do have a mixed tape today. Dow is surging. So not just quite yet, but definitely something that we want to keep our eyes on, Rochelle.
Certainly keep an eye on all those signals for us. Always appreciate you, our very own Blikre there.